Hello, everybody, and welcome to another event for Women in Cleantech and Sustainability. We're so excited for you to be here today. We're going to talk about a guide to raising capital in 2020. So, hot tips for you as a woman in cleantech on how to raise funds in this environment. And this is an event that's co-hosted by cleantech.org. Go on to LinkedIn and the internet to check them out. They're a great nonprofit organization, and also Energy Transition Ventures. I'm one of your moderators, Lisa Ann Pinkerton. I'm the founder of Women in Cleantech and Sustainability, and I'm going to introduce this event and hand it over to our moderator in just a moment. Next slide, please. We may have a challenge on the slides. So here we go. Great. So here's our agenda. Those of you who are familiar with our events, you know this rather well. We're in the introduction stage. Then we'll go to the panel discussion. We'll have a Q&A with the audience. So start thinking about what questions you might want to ask to our panelists. Then we'll have a breakout session, a couple actually, 3 of them. And this is your opportunity to network with the other people that are on this call. And these are some of our icebreaker questions to help get things rolling. What sparked your interest in clean tech? What's something you find challenging about the space and something that motivates you? And what are your current favorite resources related to climate and the environment? So think about those things and what you might say when you're in that breakout room. And this is your opportunity to meet other people within the organization and do some virtual networking. And then we'll wrap things up around 6:30. Next slide, please. If you don't already know what we do and who we are, this is a great slide for that. We've been around for 10 years and we focus on events and career development. And now we have an entrepreneurship program that we have officially formalized. We have done a pitch competition since 2018, the only one in the US, by the way, that focuses on women-led companies in this space. So that's very exciting. And we do a big TED event that we're going to bring back to the Bay Area in 2022. So we're excited about that as well. Next slide, please. Here's some upcoming events. If you're not familiar with how we promote our events, here is your chance to see what we got going on. Unconscious Bias Leadership Training, Part 1 and 2. This is a part of our Executive Leadership Workshop series. We do several of these throughout the year. And we've got a great teacher who's going to run both of these events for us. And it's very much a workshop style experience, even in the virtual world. And then, of course, we're celebrating Earth Day. And then we'll have a Mothers in the Workforce virtual event, which is a social event. So for all you moms out there looking to meet other moms, that is the event for you. And then we'll have our pitch competition on June 23rd. So please mark your calendars for that as well. Next slide. Zoom etiquette, we've been doing this for a couple of years now, so I don't have to go through everything in here, but you'll probably notice in the chat that people have already started putting in their LinkedIn profile URLs. And this is our way of communicating to everybody else who we are, what we do, and gives you the opportunity to click on those and meet people in the virtual world. We encourage you to put your LinkedIn there as well. And this is how you're going to network, because remember, we're just setting up the pins for you. It's up to you to knock them down. So here you get a chance to meet a lot of people, but then follow up with them in other channels and really have that networking experience for yourself. Next slide. We do a virtual membership. So for those of you who are new and have not yet considered membership, highly recommend it. I am a little bit biased, but I think it is of great value to people. You can attend these events for free. And if you sign up today, then you can get a refund on whatever you paid for this event tonight. Next slide. Okay, now it is time to get to the point of why you all are here. We're here to talk about raising money as a woman in clean tech, and today's moderator is Juliana Greiser. There we go, Juliana Greiser, and she is the head of the Houston Incubator and Vice President of Innovation at Greentown Labs. Juliana, the floor is yours. Welcome to WCS and this event, and thank you so much for being our moderator.
Thank you, Lisa Ann, and thank you, WCS, for this amazing honor. And I'm also, congratulations on this 10th year anniversary. That's a huge milestone. So thank you. So today we have a topic that is very dear to me, not only because I've been in the investing side for quite a while. I still am with a portfolio that are funds that are activating women into investing, and also as my role of the head of the Houston incubator for Greentown Labs. So how, what is the path to fundraising for women in the clean energy sector? And for that, we have an amazing panel of both entrepreneurs and investors that are going to give us a great overview on their experiences and what they think that the big tips are. And I'm pretty sure that many of you will have many more questions. So I'm going to start with introductions. Our first panelist is Dr. Youngwoo Lee, the co-founder and CTO of South 8 Technologies with a long career on MIT. Then we go to Maria Buitron. She's an investor at PIVA Capital, and she's also a Forbes 30 under 30. And actually, she's also a Berkeley alum, like I am. And last but not least, we have Annette Fisterbusch. She's the CEO and president of Empower, and she's also a Kaufman Fellow, like I am. So I didn't realize how many interactions and synergies we had here between panelists. So many of you already know that women in general only get 2% of the VC funds raised, and that also there's a lot less women in clean energy and sustainability. So this, I think, is a very, very timely topic. So we're going to start asking the panelists the first experience in terms of if you're an entrepreneur like Dr. Lee, what has been your experience raising funds? And in the investment part of the equation, I mean, if you have been raising funds yourselves for your funds, or if you have been allocating funds, how has been the experience in investing in women-led teams? So why don't we start with Youngwoo?
Awesome, great. Thank you so much for that introduction and putting on this event here. I guess just a bit of context. Yeah, my name is Youngwoo Lee, and my background is primarily as a technologist, engineer, and researcher across, semiconductors, manufacturing, things of that nature. And it really wasn't, this technology in this company grew out of a university space when I decided to go back to grad school at UC San Diego. So background, I think, my world sort of intersected with Julie on the beginning. We started out incubator spaces, pitch competitions, really, really early fundamentals of understanding how to, take a fundamental new technology, straight to business plans. From there, we grew to some customer contracts, a lot of government grants. It's not trivial to get, but non-dilutive government funding is how we got to where we are 5 years later, and we just closed our first venture-backed round a few months ago. So the fact that we could go 5 years without having to do that dilution, I think, is really key for us to something with clean tech, something with hard tech. It's not similar software where you can do a few years turnaround to product, right? There's a lot of development work that has to go in, long slog there. And so if you can avoid, raising capital, I think it's something you should think about. It's two sides of the coin. You raise a lot of money in order to go fast, you take the dilution, or you take it a bit more methodical. So I'm not going to say it's wrong either way, but it's something to be very conscious of.
I like the approach. I think there's a lot of people who feel like raising VC money is a goal in itself, but it comes also with a lot of strings attached. I think that as women, fundraising, there's other ways also to get money in, and the approach you took, by bootstrapping and getting grants is definitely very interesting. And I think, we need to become more creative at getting sources of funds as women. Youngwoo, can you tell us, I mean, you in your team, is it only female led, or you have a diverse team? And do you think that impacted, your path to funding?
Yeah, we're a diverse team. We're not only women led. I think only women led teams are even more rare than women partially led teams, I'll say. So in that regard, I just think it's about having, the right skill set and a nice diverse team that can really help you succeed more than anything.
Perfect. Maria, what has been your experience?
Sure. Okay. I can talk a little bit about my role at Piva Capital. Piva is, I'd say, a relatively new venture capital fund. We're based in San Francisco, and we invest in the traditional sectors of the economy that are being decarbonized and moved to be smarter. So we invest in energy, mobility, food and agriculture, manufacturing, heavy industry. We typically come in when companies are raising a Series B. So this, by definition, means that these companies have already raised funds in the past, at least a Series A. So the universe of companies that we're looking at is limited by the companies that raised VC funding in the past. We look at technologies that have already been de-risked and companies that have some commercial traction. As of today, about a third of our portfolio is female-led with female CEOs, and about 40% of our team is women. I would say it's important. I think it's very important to highlight. And if we look at the data, diverse investors also back diverse founders. So talking about diversity in venture capital is also very important as we talk about diversity in people that raise venture capital rounds. So that has been my experience so far.
I think there's a huge correlation between those two, and that's why Portfolio tries to activate more women and diverse people into investing. How did you get your deal flow? Are you specifically looking for these women-led businesses, or they find you because they know that you are a diverse team?
I would say it's a little bit of both, right? I think part of it is having people from diverse backgrounds, be that gender or I was born and raised in Mexico. So that also means that I have just connections and a network that is maybe different from my partners. And that is the value of diversity, right? The fact that you can tap into different networks. So definitely the people that I know and the pools of people where I look for companies are different than some people. I would say also this can be attractive for CEOs and people that are looking to raise capital because they find maybe, this, you can have an interesting conversation depending on who we reach out to. So I think it's a little bit both ways. And I think that is what we're really realizing in the industry. It's, I think venture capital used to be people that came from two main schools in the US that had very similar backgrounds that know sort of what they're looking for. And specifically when we think about clean tech and climate tech, we've realized that we need to tap into different pools of people with different backgrounds, and everyone is talking about diversity more and more.
I couldn't agree more. Annette, what has been your experience, your path to fundraising?
Sure. So my name is Annette Finsterbush, and I'm currently the CEO at Empower, which is a lithium-ion battery company. But this is my third time as CEO. My first time was a spin out from Stanford, funded by corporates. That was In-Car Infotainment, was sold to Yahoo Brazil many years ago. And then I raised the Series A for Ketra, which was a solid state lighting company, which was acquired by Lutron a few years ago. And then I've also, as you mentioned, Juliana, been an investor, right? So I've been an investor for 20 years. And I kind of go in and out of funds and to the entrepreneurial side, back and forth to the dark side. It just depends which side you're on, which side you think is dark. So from both sides of the desk, I can say that, you really need to think about like what it is you're looking for, right? Because with this company, we just acquired capacity that makes us the largest battery startup in the United States. And yet we haven't had an institutional round yet. So that means our valuation is well over $100 million before we've actually raised an institutional round, versus I raised the first round for Ketra from NEA. It was a good idea to do it at that time because in the end of the day, we needed to move really quickly. We needed to hire a lot of engineers. It was hard tech, but it wasn't really capital intensive, right? So you need to figure out what you need, right? To figure out when you raise and from whom you raise. Raising money is always scary and it's always hard. But honestly, if you're talking to the right people, it can be a great experience.
So how can you find these right people? I mean, how did you find that? I guess that's a key question, right? And did you see that, you know, pitching as a woman was different? Did you see any difference there?
You know,
maybe
I have seen women pitch differently than men, right? But that's also stylistic, right? It's also very stylistic. The way you find those people is, I mean, you have to think of your company, you know, as a product, right? Who wants to buy this product? Who is looking for this product? And in the end of the day, there's a lot of market research you can do about where your product market fit is for your equity. And if you find the right people, there's sort of who is looking for your Venn diagram, the space you're in, the stage you're in, the amount you need, the capital intensity, etc. And then the other part, which is like the chemistry. Who do you want to be married to for the next many years, right? And who can you really establish this relationship with? And I think those are really key to doing your homework. Don't get to the place where you need to go out and raise money like yesterday, because you need to define a relationship and you need to build that relationship over time.
What are the top tips for securing that interest from an investor, since you've been so successful at fundraising and that?
Yeah. Well, I would say that one of the greatest ones is, again, finding this alignment and not overselling it, right? I mean, in the end of the day, you have a product which somebody wants and needs to buy. You know, there's a certain requirement to deploy capital, right? We always think of the fact that we're coming with hands out. Thank you, sir. May I have another? But the reality is that this dry powder that venture capitalists or PE firms or even angel investors, super angels have, it must be deployed in a certain amount of time and within a certain charter, right? People are not just doing it willy-nilly. So I think reminding yourself to have that confidence because you have something that somebody else wants to have. And this is a numbers game, finding the place where your sale fits.
So you're talking about confidence, and maybe that's something that Jinwoo can also reply to. I think that sometimes women are told that, you know, they are not selling it enough or they're not being confident enough. But then, you know, sometimes I feel like this is also a hindrance, you know, when you're too cocky or whatever it is, suddenly they don't like it either. What has been what do you recommend in terms of style for pitching? Do you want to be like, sometimes it's like channel your inner bro or whatever it is? Do you have to do that, or can you be authentic and just pitch like a woman, I guess? What do you see there? And Maria, you can tell us also from the investor perspective, what do you see?
Yeah, my opinion is if you're not your authentic self, you're going to end up married to the wrong group.
You, any thoughts about it?
Yeah, I mean, I think Annette's correct in that you never want to take money from investor just because you need money, right? It is a long relationship with that investor. You want to make sure that you're aligned, not just in the value of the company, but it's also what is the direction of the company, what is the exit of the company, right? And how will that VC help you achieve those goals, right? But I think, but also, I mean, communicating to those investors is important, is understanding it's not an adversarial relationship in any way. I think some people really mistake that, right? In thinking, oh, we're going to go into negotiations, it's going to be battle. No, it's about finding, right, that common ground, finding where the win-wins are, and also just growing the family of people who now believe in what you're trying to accomplish and want to join you on that journey. And it is a long journey to learn that confidence and because, my background, I'm a scientist, right? So having to learn how to talk to investors, having to learn how to talk to, everyone in this ecosystem, that was definitely a learning curve for me. And I think the confidence grew the more I became sure of my conviction in what I was doing here, in what my technology could become, and collecting the other stakeholders who I had, through hard-won battles, got to see this vision finally, because, in the early days, we were called crazy by many, many people for what we were trying to do. So it's those early battles that teach you to be incredibly proud of what you've accomplished. And then also that gives you the confidence to see what you can then go forward and do.
So I guess resilience is key, and not taking feedback personally, right? Just learning from it. Maria, what have you seen from your side when you had women pitching to you?
Definitely. I think it's really interesting to talk about all these biases, and I think it's important to be aware of them, right? Sometimes people say women maybe pitch with more humility, but if they sound very confident, then that will be held against them as well. We need to be aware of that. That is how things go. Depending on who's in the room, you may be perceived differently. And so I think part of it is also reading the room. Completely agree with Annette. I think you want to be authentic, and completely agree with everyone. I think sometimes we think of this as an adversarial relationship and just negotiating, and it's give or take. I think in the end, you want to find the partners that are going to be there. Whoever is investing in your company will also be a board member, and they're going to be there for the next 10 years in the ups and downs, and having calls with you on Sunday mornings about what to do to grow this. So it's about really finding the right partner. I would say, I think that style is really important.
So what are some of the red flags that women entrepreneurs should be aware of, and in investors? Anybody?
Okay, I can start with maybe one. And so again, like talking about style and confidence, I think you also want to, venture capitalists see this as investing in people. Of course, you're investing in technology and you do a lot of diligence on technical background on the market. In the end, you're also investing in the person that is going to grow this. And so as founders and CEOs, you should also tell the story of why is it that you are uniquely positioned to be here. If you could, building a startup is hard. Maybe you don't even want to do it. If you could give this to someone else, why is it you that should be growing this, and really tell that story? What is your unfair advantage to get there? And I think that is, you need to believe it. You need to get to tell that story, and you need to communicate it well. So that's one. I think I was also looking at some comments here in the chat. You need to understand, and this is part of a red flag that I sometimes see, especially when talking to earlier stage founders. You need to understand how investors think and how the venture capital space looks like. How do the numbers look for them? In the end, they are looking for certain types of returns. Not every company should be venture backed. It doesn't make sense for every model or for every technology. So really, how does that business look like? And is this a good fit? And understand the key terms so that you also know what you're getting into.
Annette.
Yeah, I'm going to pile on here with Maria in looking at the chat, because there's one of those red flags, not about the investors, but about pitching, about the question if financial acumen is not your strong suit. If you are the leadership for your team, you need to be able to speak to the numbers confidently and with great detail. I'm come from a science background too, geoscience, paleoclimatology, but in the end I ended up with an MBA, right? Because I know that if I don't understand the numbers really well, it's very hard for me to understand how I'm going to grow a business. So I think that's a very strong yellow flag for anybody who thinks they're ready to go pitch. If you don't get it, get somebody to work with you. And strong financial management is a huge key, right? That's a boundary condition, right? Because that's for everyone how they're going to work. And then the other question that was in the chat coming from Lisa Ann was talking about strategic investors and how to manage that. I was a strategic investor for many years. And what I can say there is you need to understand what are the objectives of the strategic rationale, right, of the investor. Are they an investment firm that acquires their portfolio companies? Are they not? Right? Many will say, we don't want to acquire portfolio companies because we understand that that will put us at odds with other investors, right? So we won't get good deal flow. Okay, so what's your objective? Is your objective to have that exit coming from them? Well, I can assure you that in the time that between they invest and they decide to make an acquisition, they're going to see a lot of your dirty laundry. So you might want to be careful about that. My recommendation is if you have one strategic investor, especially one that is a customer, that's a very, very slippery slope, right? And you better, this better not be your first rodeo if that's what you're doing, or you better have really strong directors on your board. But if you have one investor, make sure you have two strategics, right? And they kind of counterbalance you. They sort of like play good cop, bad cop. They help each other to stay in balance, right? They police each other. So those are some really great questions coming in here, and they can be huge red flags.
I agree. So two things that I couldn't agree more with: know your numbers. And, I think a lot of women find numbers a struggle, and I think we need to get there, or find someone who can help us get there. And yeah, strategic investors, can be a blessing, but also can deter other investors or potential acquirers from getting in. So you also need to time it and balance it. I couldn't agree more. So there's plenty of good questions coming in the chat. John has asked a few already. Okay, so how does someone find an investor who sees value in a long-term benefits project? And I know that's what a lot of the clean tech deals have, right? It's not like a software unicorn that can exit in a couple of years. It's a long road. So how do you find those?
I mean, as we've outlined before, for every kind of business model, there should be, an aligned firm out there. And it's on everyone's due diligence to understand the ecosystem and figure out where those relationships are. But yeah, to get there, it's a lot of talking to figure it out. It's patience is key.
If you're really, really early stage and you sort of don't have that network, it's very hard to cold call VCs like, hey, I've got this cool idea. click. That's a very hard thing to do. This isn't, you know, there's not a yellow pages for this. One way, and I think Jung-Woo actually referred to it early on, is if you get non-dilutive funding early. So I'm on the board of NSF, the National Science Foundation's SBIR, STTR program, and we also run an I-Corps program, right? And I-Corps is a phenomenal program that really favors diversity, really favors diversity. Like, we are really pushing like for inclusion. So those programs tend to be really strong incubators. They have very structured programs. Speaking of going through the numbers, right? They have a whole finance segment to teach you how to present the numbers, how to drive the numbers, how to speak to the numbers, and so forth. And the beauty of things like I-Corps or getting early SBIRs is that your program manager will connect you with VCs that invest in your space at your stage. They have those relationships, they're developing them. And so that's one really interesting way if you're super early stage and you don't necessarily have this big network to start.
Another good part of the I-Corps program is that they really make you do your homework on customers. You have to do, I think, 100 customer interviews, and that'll force you to talk to a lot of people who will then maybe be able to point you in the right direction.
Totally.
And maybe I'll just add, I think, yeah, one main thing is, especially in these spaces, developing technology is hard. You cannot just iterate, change a line of code every day and see how things are moving. Like, this takes time. We're seeing companies that are working on nuclear fusion. Like, that's going to take years and years of development. It maybe does not fit the typical model of seed stage, and VCs typically like to see returns in the next 10 years. So definitely finding other sources of capital, especially earlier on. And I think it goes back to what everyone here was talking about, doing your homework in terms of investors. We're also seeing other funds in the space that maybe have 20-year funds or 15, 18, that maybe are thinking about the needs of the space in a different way. So really looking for, like, really doing your homework in what investors are looking for and how the model looks for them to find a good fit.
Definitely. I think there's, you know, a debt also that could be used for some of the pilots, not only the SBIR grants, STTR, that could be extremely valuable. We talk about I-Corps as a great program. I know that VentureWell has, if you go to venturewell.org, they have the I-Corps program. They also have another program that kind of follows a little bit the I-Corps program called Aspire. And actually they are looking for applicants for their next Aspire program that's starting, I think, is around end of April. So I think applications are going to be open till end of March. And it's about investment readiness. So not only about the numbers, cap table, they do kind of a board meeting mock-ups to talk about IP negotiations, you know, due diligence. And I think that's key, right? We talk a lot about due diligence from investors into startups, but the startups need to do their due diligence in investors, and it's also a numbers game. And maybe, as you mentioned, Maria, some of the projects that are longer term could be, you know, all kinds of, you know, project finance, for example, or other ways of getting capital out there. And there's amazing programs that have been recommended in the chat. And I know that, you know, those are also part of the financial acumen you can get. And those were some of the questions that you could get there. Let's see. This, Caroline, I think that's a very difficult question to answer. How do you know when you have an entrepreneurial idea that it is worth taking the leap of faith of starting a company? Anybody?
John Lewis said it. You got to talk to 100 people and ask them if they would buy it. I think you do have to do that part of your homework. You have to figure out whether the timing is right, how much money it's going to take you to get there. You know, yeah, before you take the leap of faith, you got to figure out what you're leaping into.
Any other tips? Okay, similar question about customer development and customer discovery. What are your favorite resources?
Prayer.
Well, I mean, that really comes down to your business model, who your customer is, right?
Definitely.
Yeah, I mean, I think for customers, I hate to say this, I never really believed that digital marketing for hard tech was a thing. I was like, that, you know, didn't really resonate with me. I'd never done it in my previous companies. But now, you know, we have more inbound interest than we could ever manage, right? And it's a function of just putting out there what it is you do in a very digestible way. I'm not suggesting that you should just sit back and wait for the customers to come to you. Of course you shouldn't. But the beauty of that also helps you to get from one person to the next, right? You're going to have a conversation and then they're going to say, oh God, I know somebody at Boeing who you should be talking to, right? And then you can, and always at the end of every conversation, the question never hurts to say, who are the other 3 people I should ask this question to, right? People are so willing to help if you just ask.
Yeah, definitely. So, you know, let's talk about how fundraising has evolved over the past few years and how fundraising in 2022 is different. And one of the things is COVID, right? And this new working from home world. What are the new tips for meeting people who might be an investment target?
Okay, I can start. I think this was very interesting. I actually started working in venture capital a few months before COVID started. So it was crazy to see how things were changing. I remember having conversations with our team and investment committee and people saying, there's no way we can invest without meeting people in person. You need to have dinner with them and shake hands. And we're like, maybe something needs to change. Otherwise, I don't know if we're going to be writing checks for the next, apparently 2 years. So definitely things changed. I think we saw, I mean, the numbers from last year are crazy, right? Cleantech raised way more than in the past, 10 years combined. But also, if you look at that, those were also huge rounds and investing in companies that then had already raised in the past, or just VCs investing in companies that they had already invested in the past. And that is just piling onto their winners. So it was, maybe people were talking about you could be anywhere and meeting investors that were typically in Silicon Valley and maybe you needed to travel. Now you could meet people from anywhere. But also it was even harder to maybe get access to those earlier rounds. So I think you need to be very intentional about reaching out to people. You need to be very intentional about leveraging your network. I think communities like this one where we're here today, other female-led communities, or specifically in the spaces where we work, you need to be willing to ask for those intros and really leverage that to get access to the first conversations, because that is in the end, I think the best way to meet people and the best way for investors to get to know companies.
Any other thoughts on changes, how this year is different after COVID?
Wait, so are you saying, Maria, you actually have invested in companies you haven't actually visited on site, or did you just delay that?
Yes, no, we invested in a software company, so didn't meet them in person, and now they don't have offices anymore. But we were able to invest in companies because we had met the teams in the past, even if we had not invested in them in the past, and others were with the, I believe, network of co-investors. We also knew them well, and so spent a lot of time on Zoom, but didn't visit in person, and we were able to do that in, I would say, early days of the pandemic.
Very interesting.
So I have investors that I didn't meet until today in 3 dimensions. It was good to actually, like, sounds creepy, but touch and feel them, right? Shake a hand. And, you know, of course we laughed about it. It was like, Guy, I feel like I know you better than I know some of the people that I hang out with, because we've spent so much time on Zoom. But the fact is, it was really the first time that we'd ever met. So I think, and Kaufman, right when the pandemic happened, right, in March, we started having all these big seminars, and we started talking, because I was CEO in on the 6th day of my first time as CEO, 9/11 hit.
Oh, wow.
And I had a software for in-car infotainment, and my demo was travel. So, and there was going to be no travel for a long time. And so, you know, at that point, there was an Arctic winter. There was no money deployed in this country for over 6 months. And I fortunately had a very strong investment network in Europe. And so I went to Europe and I raised money. But you know, so when the pandemic came and my investors said, you know, oh, what are you going to do? Are you going to raise money really quickly now? And I said, no, I've got this, right? I did this during 9/11. And it's just not, we're not going to raise any money for the next 6 months because nobody's going to invest, and then it'll be all fine again. And of course, that wasn't at all how it happened, right? People really kept investing, and actually investments picked up. We actually did at NSF, we put together a task force to make sure that we focused exclusively on only 2 things: diversity and inclusion, and the pandemic, making sure that we got to unique regions during the pandemic to make sure that people were still innovating and applying for the funds. So I think, yeah, I think it's been an interesting time. But the cool thing about it is, again, now you can reach out to anybody and have, you know, a 15-minute coffee chat and figure out if you're a match. You don't have to spend an hour driving to their office and then waiting in the waiting room. And then, you know, it doesn't have to be such a big blown up thing. You can just have a conversation, a coffee chat.
So in some ways, it has become much more efficient, right? And since this is a numbers game, you know, you can get to a no faster and to continue the conversations faster too. So you were talking about NSF, and Shay here in the chat is also asking a question about that, you know, the process difference between publicly funded donations versus VC or other grant processes. Any of you who have gone through both, you know, the grant process and the VC process?
The grant process is rigorous. Chigwu will tell you, because she's probably writing those grants and there are a lot of pages. Now, NSF has tried to make it an easier process. We, 4 years ago, instituted a pitch process, but I'll just be perfectly frank and tell you that the way that the government is set up to allocate these dollars, 75% do make it through the pitch process, and not 75% get funded, right? So, but it does save you. I mean, I think the application used to be like 40 pages, and now it is, you know, certainly less than half that. So, but remember that they're going to do very strong diligence on who the PI is. They're going to look at how much are you pressing the state of the art, right? They're really looking for things that are disruptive, truly, you know, swinging for the fences. So that's quite different, because Maria said, you know, we want to see a return in 5 to 10 years. right? And so 5 to 10 years, you generally don't take something from an idea stage of swinging for the fences to a commercial product. So, so I think, I think non-dilutive funding is a fantastic way to go. It's also a fantastic way for you to sort of get your idea vetted early on.
Definitely.
Yeah, because remember, I think it goes back to Annette's first point. What is the point of the money, right? If you're at the stage where you still need to validate fundamental ideas, go for the government grants, because the point of government grants is to fill a hole that no VC will fill, right? Absolutely. The government has deemed innovation is important for our country, so they will step in. But if you're at the stage where tech has been validated, you have initial customer traction, you need to scale up, go for the VC funding. I think someone else has also brought in IPO as not all companies should go IPO just because you think you can go IPO, right? That funding has to be there for a reason.
So that's go for it, Maria.
There's actually even there's a second valley of death, right? So there's this first valley of death, which is, I got this great idea and I don't know how to vet it, and I'm going to go and get government funding to see if I can, with clarity. The other place where hard tech gets stuck is you get sort of the Series A, and then suddenly you're stuck. And between Series A and Series B, a lot of companies go away. But NSF and the DOE and other agencies actually have funding mechanisms for that, right? They really want you to stay with it and keep trudging along. And in some cases, like STTR, you'll need to get a customer, or not even a customer, a partner, manufacturing partner, who will say, this is deemed worthy, and we're sort of supporting them. It's a very loosey-goosey kind of support. They don't have to put a ton of money to it, but it's very helpful. And those can be a couple $1 million. So maybe not, Jungwoo and I are in batteries, and a couple $1 million will just get you enough money to go get the rest of the money that you need. But for many early stage, that can really take you to a TRL of maybe 5, 6, 7. And at that point, then you can go to customers.
So I'm gonna set the basics because I think, one of the things about empowering women into fundraising and investing, I think, is getting through the jargon. And I think we're getting to a lot of jargon here. And I see some of the questions that are like, okay, can we go back to the basics? I don't think everybody in this group understand what TRL means, for example, and the different levels, all these things. So maybe, Annette, can you tell us what TRL is?
Yes, and it's your technology readiness level. And it's actually, Google it, use it. It's the new verbiage. And then there's something else in the chat room here. Publicly funded donations don't exist. Grants have expectations and milestones, and you won't get the rest of the money until you've hit the milestone, right? So basically, they'll give you a little bit of money to get you going, and then you're going to have to hit milestones, and then they're going to write you a check. And yeah, so publicly funded would be a grant, and VC would be an investment, whether that's a debt instrument or it's equity.
Okay, Maria, I know that that's something that might be a doubt for some of the people. Can you tell us about the different series and the different stages? Because we've talked here, and it has told us, there's 2 value of deaths. Well, and one can be between Series A and Series B. Can you tell us the different series stages and what they mean in terms of,
of course,
development?
Of course. Yeah, and I think this has also changed a lot, and it continues to change. But typically, you can think about investing in companies or raising capital from seed stage. Actually, some funds also do pre-seed, and companies raise pre-seed rounds, and that is really idea rounds. This is very different when you think about hard tech and like hardware technologies that are coming out of a lab versus maybe software that is also like more conventional business, more conventional model for venture capital. But it is the idea or the early stage technology, and then you raise a series A, B, C, D, whatever you need. These are all paths to, if you are raising capital from a VC, VCs want to own part of your company. So they invest $10 million for 10% of your company because they expect to see 100 times that money in return. So that means that you need to think about the exit for these companies. Maybe that is an IPO. And so an IPO would mean that VCs can sell their shares in the public markets. Maybe it is an acquisition. Maybe last year it was all about SPACs, right? And SPACs were a different way of doing an IPO and being and getting to be a public company. But every time you raise capital as a CEO and as a founder, you can think about it as selling a piece of your company, and always think about what the investors. You should think about what the investors' expectations are in terms of returns for that. This is also when we talk about not every company fits the VC model. There are some businesses that can generate recurring revenue, but maybe won't see the 100x returns that investors are expecting. And that is fair, right? Only a limited amount of businesses will fit these crazy multiples that we're looking for. That's okay. I think there's other ways to think about that. But if you're going into this path of raising venture capital money, you need to be aware of the expectations from investors.
Definitely. I think we are having time only for one last question. There's a question in the chat about recommendation for programs and incubators, accelerators, to be able to assist with fundraising. I already see that there's a few recommendations from Joy. The Cleantech Open is definitely a good one. And I know that we're talking about creating a resource guide. Any tips there?
I mean, I've been through Cleantech Open. I think it's a great program. I think we've also done ICOR. In California, the CalSeed program is just great for just early stage kind of startups, just to, begin to get a foot in the door in the ecosystem.
Well, as incubators, Los Angeles Cleantech Incubator is there, of course. Greentown Labs is both in Boston and Houston, and also takes some virtual memberships. Then you also have pretty excellent acceleration programs that are, only the tech stars, but you have in Houston, you have the Rise Clean Energy Acceleration Program that is accepting applications. Those are the ones that come to mind. I think Third Derivative is also there and it's virtual. I mean, although they're based in Boulder. Elemental is there too. I agree. So Alyssa's putting like 3 there: Lacey, Greentown Labs, Elemental, CalSeed. Depending on, I mean, then if your technology comes from a specific university, you might have also university related accelerators that could be the first stage. You can have like the Engine or others, MIT. There's some paths that universities are putting there to be able to get to at least a product market fit. So I know that we have we are at time, but I wanted to make sure that if you had any recommendations or final pearls of wisdom for the audience before we get into breakout rooms, you can do it. Any thoughts, parting words?
Find mentors only with experience.
I agree. And you don't have to basically accept everything a mentor can tell you, right? Because there's a lot of conflicting mentorship advice there.
I mean, you can say that for any of your advisors, right? We all only have one life to live, right? And we're all drawing from own experiences. The market changes, your tech changes, everything changes. And so I think to Net's previous point, you have to be very flexible, right? When disaster hits, if capital dries up in 6 months, you need to have an alternate path ready. But if you believe in what you're doing, be relentless, right? Because you'll find your champions one way or another.
Find your champions, and your network is your net worth, right?
I like that one.
Yeah. Okay, good. I wanted to finalize saying that, for those who say that they cannot find deal flow, investors who say like, we are not finding any women led companies to invest in. I don't think there's a pipeline problem for that. There's also a network problem. So everything is in the network. So I really wanted to thank WCS for making this amazing network possible. And now I know that I'm going to pass it over to Lisanne for breakouts.
All right. Here we go. We are back. We're going to give Alyssa a quick moment to cue us up again. But if anybody has any insights they would like to share from the last session, please feel free to popcorn them out. We'd love to hear what you guys are chatting about and what's really resonating with you. In my last session, we were just talking about what keeps people motivated, and I was a little bit interrupted while we came out of the breakout room. But what I was saying was, whenever I feel really depressed or nihilistic about the state of the world, because sometimes I know too much and I read too many reports and everything, I just try to be in action, because being in action tends to be a cure for anxiety in general. Just doing something in your sphere of influence to make a difference is enough.
Does anyone have any insights that they want to share? Any resources? Please feel free to drop them in the chat. We'll be sending the chat out, as Lisanne mentioned, so you'll be able to go through and find all of these resources on your own, and hopefully keep raising your eco IQ. Alrighty, so we're going to close out the event. We're going to start with our co-host again. So we want to give another thank you to cleantech.org. We really appreciate them helping to promote the event and just get all of you, here tonight, and appreciate the community that they've helped to grow to provide a space for people interested in clean tech, whether it be entrepreneurs, investors, or anyone really interested in the environmental and tech space. Next slide, please. And we'd also like to thank Energy Transition Ventures, an early stage Texas and Silicon Valley venture capital investor. Please make sure to check those out. And another thank you to our panelists. This has been a really insightful panel, and I'm sure all of you have a lot of things to either research or action items that you can take away and implement right into your pitching strategy after this session. So we appreciate their time and their insights. Next slide, please. And a couple of upcoming WCS events. So we have an unconscious bias leadership training coming up on April 7th, and there's a second one, part 2, on the 21st. We've got Earth Day coming up as well, and we have lots of virtual events. And ending in June, ending on this list of events, we have more than just June, but in June we'll have our pitch competition, which is a really exciting time to highlight women entrepreneurs, and is almost an offshoot of this event right here. So we hope you'll join us. Next slide, please. And then we also would love to thank our WCS volunteers. Events wouldn't be possible without our wonderful volunteers. So we've got our marketing event lead. We have our Zoom producers, which helped out with, the breakout rooms tonight. Those were very seamless. So appreciate that, Alyssa and Kirpa. We also have our breakout room facilitators. Big shout out. I hope you all enjoyed your wonderful conversations. And if you'd like to be a WCS volunteer, feel free to shoot an email to Kirpa, right? Their emails on the screen, or check out the QR code. Next slide, please. And last but not least, please do make sure to keep in touch with us in the virtual world. We still have virtual events, and we have a lot of resources on our YouTube channel and LinkedIn. So we'd love to keep in touch with you all. And I think that's it. So thank you all again so much for joining us. I'd love to see any other resources in the comments. We'll make sure to send the chat out. and hope you have a great rest of your afternoon, evening, wherever you are or wherever you're watching this. Have a good one, everyone.